Video Archive 61, SPY long. Alrighty. How you doing? I'm back. Trade on the screen here is my SPY trade. My entry was about 492. I'm not going to get exact numbers. Roughly 490. You can see it on the side here. 492 is my entry. Exit was 646. Trade duration lasted 98 trading days. It's going to be a short video. It's very straightforward. The entry, well, at least the entry was straightforward. The exit, we'll get to that. But as you can see here on the on the monthly, this is the 50 period moving average, the orange line. So since the recovery after the 2008, or I guess there was 2007 high, 2008 global financial crisis, crash, boom, reestablish an uptrend. And since that uptrend was reestablished, the 50 has acted as the best value buy, as you can see. Right, you got to buy there. COVID went, significant percentage lower, 15% past it, but that was just a quick wick, and then we were quickly back up. 2022 bear market trended straight to that line, and as you can see, the April 7th was the date specifically, but the April was the peak tariff uncertainty and fear. As I recall, the leading narrative was the United States is going to lose global dominance. It's the end. Jury's still out. Market's up. So I took that entry almost solely based off vibes, a feeling of how much blood was in the streets and the terror people were feeling. And I could feel it in myself, that palpable uncertainty, that holy shit, things might go to hell, literally, right? I was looking at like the 200 monthly or, maybe the 200 weekly. I guess, never mind, 200 monthly. Like if we lose this, we're going way down. It hasn't happened really ever, except for, back before the 200 existed. You can see we tested it here after failing at the 50, while recovering from the 2008 crash. So that 50 monthly really has been just the best possible buy you'll get for the last 20 years or 15 years. So, I mean, that was really the gist of it. I have my adjusted for dividends off right now because I just want to make this point. I'll switch back, but you can see that horizontal level that price tested was also the previous highs before the bear market. So it's the classic, support becoming or resistance becoming support. So those were kind of the two main reasons I bought there. I played around with some fibs a little bit to look for some confluence, like, hey, is this some sort of significant retracement? All right, we hit that 382 at 491. 382, as Rocky Outcrop often says, is a common fib level retracement during a trend. So there's a 382. I might have been looking at this fib a little bit, right? It's between, reaching for a golden pocket. I choose that fib because that is, you can see once this structure broke out, once the bear trend broke out, retested, went on, put in a higher high, that's that higher low. So you could consider that in retrospect confirmation of a trend change there, although it wasn't confirmed technically until we broke that high. But so I just used that as extra little measurement to see how things were doing. And then the previous local low just to see what kind of extension. And you can see for 1272. So a little bit of extra confluence there, not anything super significant or material that you can really use to inform your trade. It was just an extra little sprinkle of confluence. Now the exit. This might age terribly because as you can see, for the majority of the life of this asset, it's at all-time highs for long, long periods of times. It just does nothing but go to all-time highs. And you can see before the April, I'll call it the tariff tantrum, before the tariff tantrum low, this is the weekly we're looking at. You had one, two, arguably like 6 touches of divergence across all these highs. before it really retraced. You could see it was kind of floating. The RSI was giving that beach ball, right? Trying to push a beach ball into water and it keeps popping up. Although this is inverse because it's popping down. You can see it's just floating down there, looking to test down here as it often does. Now, historically, like for COVID, right? There's just one touch before the bear market. There was this couple that touch across these highs, probably another touch across these on that. Um, yeah, that's a sequence of lower peaks right there, but the peaks here are higher. So it doesn't take much. So keeping that into account, you can see here on the weekly. Now, keep in mind this date, the weekly is not closed as of right now. So this could always tick back up, but it appears as if there could be a potential divergence across those highs right there. Uh, you can measure across these highs, and RSI is lower than it was here. I'm hesitant to look at that because we did come here and I would argue possibly resolve this divergence by coming down here, but that doesn't mean it's not important data that you can relate back to itself. So that being everything on the left side of this line to the right. You can compare that and get some information out of that, but uh, hesitant to do that. Either way, it's that I'll go to the daily here real quick so you can see the divergence clearer. Um, right, you got 1, 2, 3 touches, 1, 2, 3. You're kind of getting that pull, the sucking. There's like a vacuum trying to pull that RSI down past the center line. As you can see, we closed today higher low than here, but the RSI is lower, so it's starting to put in divergence. We'll draw this on. Although, they just break this structure. Maybe we don't get a large retracement, but maybe we do get something like that and come back down here, 615-ish. I won't show them, but there's some flashes below because it's Rocky's proprietary indicator, so I'm hesitant to be putting that out there. He deserves a lot of credit for that. But there are flashes below, back around maybe in the 500s, maybe the very low 600s. So I'm looking to capture that. Now, I mean, this is 31.5%. SPY is up 8.6% year to date. So this trade alone outperformed the SPY on the SPY by 3.5x. But actually, I guess real quick, just one more thing I'll point out. Like another reason I wouldn't take it as a full reason, but a thing I was aware of when I exited was we have reached the 1272. To me, that's arbitrary. I don't know much about what that specific extension would mean, what kind of other information you can derive from it extending to there, and why it wouldn't continue on to a 1414 or 1618. But so we're at an extension which it can turn around at. I probably should have maybe done a little bit of looking back. Right, there's a 1618 extension. Here it did a 1272 before pulling back from 478 to 460. That's not very big. So that's kind of the underlying risk of exiting here and trying to oscillate. Because I'm doing these trades in my tax advantaged account, my IRA account. So I just took half my position off the table, left half in because it's supposed to be the non-touch. Don't touch this. Don't trade this. Let it run. But I'm looking for a retracement, maybe back down to the 200 period moving average on the daily there. Right, maybe just this 236 at 605, possibly 580, test that cross, hit a 382. There's a gap down here at about 575 and 520. There's some gaps below, but SPY tends to leave lots of gaps, right? So there's a big risk here trying to swing this, but I took that 30% gain and I'm happy with it. It's beautiful. Absolutely. Catch you in the next.